today. Across the board, mortgage rates are down. We're coming up to 7 weeks of declines on our average mortgage rates, which had a little bit of a bump last week, but now we're starting to see more progress downward. Why did this happen? I'm going to reiterate the impact of the CPI, the Consumer Price Index. That inflation report from last week still was digested by the markets, and more people started trading along the lines that were appropriate for that. And so we saw some more relief on interest rates for that reason. We also received the initial jobless claims last week after the recording of the episode. The initial jobless claims came in at 220,000, which is slightly lower than the previous reading, which was 225,000. In addition, other economic data that we received was the Producer Price Index. This is known as the PPI. And again, that is showing us what the people who are selling the products, services, and goods, what their costs are. So any increase there normally gets translated to increased cost to the consumer that gets reflected in that CPI report. Well, that came in just a bit lower. So the headline number came in at 3.2% price appreciation year over year, and that's down from the previous reading of 3.7%. And the core, which is excluding the volatile food and energy elements, that came in at 3.3%, slightly down from 3.4% on the previous reading.